How's it going, everybody? It's Stas here. So before you hit the dislike button, before you report the video, before you leave a hate comment, hear me out. Everybody out there, whether you're a trader, an investor, you're starting out in the markets, you're an experienced investor, trader, wherever you are, you have to be ready. You have to be prepared for a 50% stock market crash. And this is more of a psychology-based video, off-the-cuff type of video. I literally have no notes for this, but I do want to break things down from my perspective. We're going to talk a little bit about history. We're going to look at some charts and not no one-year chart. We're going to look at some 20-year charts, guys. We're going to look at some larger time frame charts here. So sit back, relax, take a sip of your coffee, check out my Patreon down below if you guys want all my real-time moves, and feel free to also get $50 free from M1 Finance. All of those are linked down below. And let's just talk. And the truth is, a lot of people, especially beginners, even those that are seasoned, right, and that have been in the markets for a couple of years, they get caught in the euphoria. And even people that have been in the markets for over a couple of years, let's say 10, 15 plus years, those that have been around the block for some time, a lot of people just get caught up in the euphoria. You know, we've seen the markets go up like crazy the past couple of years. We've seen all the stimulus from the Fed. We've seen all of the manipulation, quite frankly, from the Fed, keeping the interest rates at zero, you know, letting asset prices run rampant as they're pumping in a crap ton of money into the economy. We've seen all of this, and people are blinded by history or blinded from history, right? They kind of and tend to forget how things work in the markets, and they forget that things could get rough sometimes. I mean, look at this. You all know in March we saw the fastest crash. In March 2020, we saw the fastest crash ever. I mean, this went down about 40% in the span of a couple of weeks, but what we also saw was the fastest recovery because of the fastest response from the Fed in terms of the stimulus. If you guys remember in 2008, they didn't react that quickly when it comes to stimulus, which is why the sell-off was more drawn out. You can see SPY was at about $158.07, and it took about a year and a half to get down to $67, which was a 55% crash, and that was more drawn out, like I said, because the stimulus, it wasn't as quick. You know, they didn't throw money at the markets as quickly as they did this previous go-around back in March 2020, and that's just an example. You know, we went 50% down, 55% to be exact on SPY. And QQQ, if you guys know, QQQ tracks the NASDAQ 100. This went down a lot as well. This went down about 50% in 2007, 2008, maybe even more than that. You guys can see if I zoom in a bit, yeah, about 55%. Back in the dot-com bubble, this went down like 80%. I mean, you guys remember how, well, some of you guys don't, and I wasn't even trading in the dot-com bubble. I'm not that old, guys, but I've read history and I'm aware of this, which is what you guys have to be aware of. You know, the tech stocks got completely slammed. A lot of them were overinflated. They didn't make money. They didn't have earnings, and they were just too inflated. And we saw that huge bubble just burst, and a lot of people don't realize this, and they're blindsided by it. They think, oh, it's euphoric now, it's going to be great and rosy, sunshine and rainbows forever, and the truth is, it's not. There's going to come a point where we are going to crash, whether it's 40%, 50%, 60%, and a lot of people are going to get completely wiped out. And the truth is, nobody knows when this is going to happen. And if somebody tells you, we're going to crash tomorrow, guys, we're crashing in a month, you have to run the opposite direction, because nobody knows what's going to happen, when this is going to happen. But the truth is, it is going to happen. Now, am I telling you to stay out of the markets, you know, don't be invested? First and foremost, I can't tell you that. I'm not a financial advisor, but the truth is, you've heard this saying, and I've said it before, time in the markets is better than time in the market. So I'm not necessarily saying it's a good idea to be 100% cash, because that's not smart either, considering the inflation, the devaluation of the currency, the fact that you're missing out on gains from dividends, potential price appreciation. I don't think it's smart to be 100% cash, but what I do think is smart, and this is more of a psychological thing here, guys, you must understand that stocks will get cut down. So you kind of have to brainwash yourself in a sense where, yes, you are invested, you have cash on the sidelines. That's very important. But you have to brainwash yourself to the point where you want to see red and you welcome red in the market. So let's say, for example, we drop 20%. Instead of seeing that as an, oh my God, I have to sell, I have to get out, the world is over, you have to brainwash yourself to say, okay, we're down 20, 30, 40, 50%, whatever it is, whatever the crash gets to. You have to brainwash yourself and be like, this is good. I'm going to add more to my companies. I'm going to add more to my ETFs here for the long haul. And that is the way to do this, guys. That is how you have to mentally prepare yourself, because the worst thing you could possibly do is just keep investing, be oblivious to history, don't and not understand previous crashes, the way cycles work. Then all of a sudden, boom, you get blindsided, the markets tank, and you don't know what to do. You don't know whether to buy more, sell out. You don't know what to do. That is the worst situation to be in. Worst position to be in. So the way that you prepare for this is, again, turn that psychological switch in your head. Make sure when you see red, you're not panicking. In fact, you welcome the red and you want to buy more. And also, comprise your portfolio of course, have some speculative stocks, whatever, but be in well-rounded businesses, solid businesses with fundamentals that are strong, that aren't going to get wiped out when the crash comes. When the crash does come, there's going to be businesses, I'm telling you guys, that get completely wiped out. And if your portfolio is full of these businesses, well, to be blunt, you're screwed. But if you're in a portfolio with well-rounded businesses, strong fundamentals, solid financials that will make it through, and the prices go down, the stock prices go down, you should view this as a buying opportunity. And the truth is, guys, when stock prices go down, the path to financial freedom, the path to wealth shortens, because your returns long-term will be higher because you're buying at a lower price. A lot of people get that twisted. They think, oh, just because stocks are going up, that's the better time to buy. But the higher prices you pay, the higher valuations that you're paying, right? The more delayed you getting the retirement's going to be. You getting the financial independence is going to be. And another big thing that I'm looking at here, which is screaming that the markets are overvalued, is the Shiller PE. This pretty much takes the S&P 500's PE over the past 10 years and it smooths it out. And I've shown this chart before. I'm not editing this video, so I can't pop it up, but go look it up. Back in the dot-com bubble, the Shiller PE was at a 42, 43, something like that. Very high, extraordinarily high Shiller PE. And you know what it is now? It's at like 37, 38, at least when I'm filming this video. When you're watching it, it could be a little bit different, but it's right around there. And you guys remember what happened after the dot-com bubble when the Shiller PE was at a 40 plus? Well, it crashed. We talked about that earlier in this video. It completely crashed and valuations suppressed down to, they decompressed, whatever you want to say, down to more favorable levels. And now we're at a very high point in terms of the Shiller PE. So this could very well happen again. And I'm not here to fear monger. I'm not one of those channels where they just bash the economy, the markets every day. They're just fear-mongering. I'm not a news channel that's completely just throwing negative stuff out there every single day like you see on TV. That's not what this is. I'm living in reality, though. This is not some euphoric, utopia. This is reality, and in reality, we've seen crashes come. We've seen them go. We've seen them, obviously the markets recover from these crashes, but the thing is, people weren't prepared. Most people are not prepared for these crashes. So I hope you guys got something out of this video. You got to stack some cash and be in fundamentally sound businesses. That's the truth. And if you are in that position, you have, let's say, 20, 30% cash, 15%, 25, whatever works for you, and you see the markets crash, you're going to average in, and you're going to hold for a couple years, 5, 10, 20 years, and you're going to be fine, especially if you don't panic sell at the bottom. That's the worst thing to do. Let's say the markets crash, and instead of buying more, you're panic selling at the bottom. That is a way to not get to financial independence, financial freedom, retirement, whatever your goal is. That's a way to not do it. Again, the way to do that, to get to retirement age and have a good amount of money, or whatever age, it doesn't have to be 65, it could be 45, whatever. The way to do it is add more when the stocks crash, when they're at better valuations. That speed-ins or makes your path to wealth quicker. I don't know how many times I'm going to say that, but I'm trying to hammer it into your heads, guys. So overall, that's it. I hope you all enjoyed the video, got something out of it. If you did, make sure to hit the like button, subscribe, drop me a comment. Let me know your thoughts down below as always. And feel free, like I said, to check out my Patreon. If you want all my real-time buys, sells, call-outs, if you want a morning update video every single day, that's all on Patreon. Link down below. Or you guys can go to stocksurfest.com/Patreon. And don't forget to get your free money from M1 Finance. All you have to do is use my link, deposit $100. But Stas, you said it was free money. Listen, it is. Once you deposit $100, we each get $50, and then you can take out the $100, and boom, you have $50 free. And you could also do that with M1 Finance. Simply deposit $100, or Webull rather. Deposit $100 with them. You get 2 stocks up to $1,600. All of those are linked down below. I'll catch you all in the next video. Thanks for tuning in again. As always, keep crushing the markets, guys. Stay safe out there. Peace out.